Welcome back to this very special edition of Indianomics, where we are wondering whether this growing kitty of long-term savings in India via insurance and pension can be used to fund long-term needs of infrastructure. At the moment, of course, the insurers, Vibha and Amit, who are with us from HDFC Life and SBI Life, are worrying that they want safe assets. We have also been speaking with Mr. Rajkiran Rai, the head of NABFID, which is funding infrastructure, and with Mr. Nilesh Sathe, a former insurance regulator, and AZB's Behram Vakil, who is the IBC expert. Gentlemen, and Vibha, thank you for your patience. Okay, let me start with Mr. Sathe. Mr. Sathe, what kind of protection will you want in the form of first loss guarantee or credit enhancement that will allow you to increase this 15% that insurers are anyway allowed to invest in corporate bonds?
No, as it is, safety first is the principle of insurance companies. So whatever guarantees can be given, they are all welcome, no doubt about it. But increasing it beyond 15% probably may take time, because even that 15% is not achieved by insurance companies as of now. Okay. And between 9 and 15, still there is much gap. Okay. So if good corporate bonds yielding good return are available. Secondly, if government borrowing really goes down, especially for long term, because insurance companies are not interested in 5-year and 10-year GSEC. They are more interested in 15, 20, 25 or even more 10-year GSECs. So if similar options are available in corporate bonds with may not be same guarantee, but almost equal guarantee and higher return, why a fund manager will not invest?
But what is your minimum? You all want it to be AA plus? Is that IRDA's requirement?
No. Actually, what IRDA has specified that it is the board approved policy which has to decide whether it should be A, AA or AAA or whatever it is. And again, suppose it falls below that benchmark, then it's not to be sold off. It will be categorized as unapproved investment in the balance sheet. Okay.
So, Vibha, what kind of a structure will make you comfortable? Would a first loss guarantee suffice?
I think so. I think if we don't lose the capital and we have reasonable certainty that if the underlying cash flows on the basis of which these bonds have been issued, if say there is a state government, a particular state government that the roads being laid and then nobody pays the tolls and just say we don't believe in all this. Or there's some morcha and so on, and the whole project goes here, right? Then it's when the underlying cash flows are under threat, then the government does step in. Maybe not very dissimilar to a Freddie Mac, Fannie Mae, that kind of a thing, right?
That is the structure you want.
That's the structure I want, and that will give us a lot of comfort. At least today we have invested as of recently close to 400 crores in NABFID. But that could become 4,000 crores very easily. If a little bit of backstop is there to say hum hain, don't worry about it. It's a win-win then.
Okay. Amit, would you want to add to this? What is that one sweetener you want?
So, I will say that spread is also a thing which we should consider. If the spread is only 20 bips over government security, then of course I will not be interested. That doesn't reward our risk.
The spread also is because there are too many of you chasing the bonds, isn't it?
Not exactly. It depends on the market cycles also. Sometimes it goes as high as 70 bips also. And the second is the exit route. There is no liquidity for most of these corporate bonds in the market. That is also one important factor.
So just to comment very quickly there, I think exactly what Amit is saying. So until there are enough government bonds, we will prefer government bonds, because the spread is not. That's the decision-making tree. If we are falling short of it down the line, few years down the line, which is likely to fall, then we will see whether it's worth our while taking this risk if the government doesn't step in. Then the products that we sell that require this will take a beating if we don't have enough confidence that we are going to get the money back to pay the policyholders.
Fair enough. This is the first constituency which wants a higher government deficit, fiscal deficit.
No, not exactly.
Not really. Okay, Mr. Rai, what can you offer?
Actually, while the way they are looking at, actually, maybe this is a carryover from the 2014-15 days.
Oh yes, we went through the AQR.
So basically the impression what is created around these assets no longer is true. Actually after that we have evolved a lot, the concession agreements and all that. When we talk of infra, what is infra? It is nothing but public utilities. It is road, energy, ports, airports, where you know the utilization is going up, and we have not seen any defaults of late. When you were questioning Behram, like just look at the thermal assets. We had too many of thermal assets in 2014-15 without buyers. Now look at the thermal assets being sold, they are fetching more than 100%.
Yes.
You know, it is a demand supply also. The particular, like, you know, there is so much of energy demand
we
today.
just have a bad memory.
It is a bad memory, but then we are not factoring, like, you know, today LGDs on these assets, because see, toll road, it is not going to become zero toll.
Yeah.
Instead of 100, it may become 80, 70.
No, on the contrary, because of FASTag, it is doing better.
It is actually, if you look at the companies which are in toll road operators, basically, they are all doing well actually. It is only going up. But
yeah, so we take it. Recency bias will perhaps go away
yes.
if they have a good experience with their existing assets.
The second part, what comfort they are looking at. Look at the counterparties today. Now it is in solar side, like or wind side, it is SECI, NTPC, you know, your state discoms, the quality has improved a lot today. The payments are coming within 30, 45 days now. So I think the counterparties are quite strong. Now if you look at the road assets, many times the counterparty is NHAI.
Yes.
And also we have to see the class of assets. See, in road there are two distinct assets. One is HAM, which is very safe. And we also have to segregate. We are not looking at insurance player to come in at the greenfield stage.
Yes.
We want them to come in on completion of the project where the construction risk is over. Actually, it is we need to move out from the typical financing models of the bank to the insurance and pension.
Which is what the banks want. They just want someone to take off the assets.
Take off from there. Greenfield risk, there are enough players to take. After that, the operational assets have to be financed by the bond market. And then the construction risk is over, it is only revenue risk which you carry. So revenue risk actually, again, when there is so much strong counterparties, actually if you produce power, there is someone to buy.
Yes.
But if you are not able to produce power, there is a risk you carry.
Yes.
If the toll goes down, actually the concession agreements, the recently circulated concession agreement, if you see, there are a lot of precautions built. If the toll goes down, they elongate the concession period.
Yes.
And a hybrid, like a HAM model, it is annuity based. Once it is completed, it is as good as pension.
Three very good points that you make. One, that the recency bias has colored us against insurance, and perhaps the cycle has changed for the better. Some laws have definitely improved in terms of discoms not being allowed to buy from the IEX unless they make the payments. That has cleaned up some of the power receivables. And of course, assets like NHAI or counterparties like NHAI and NTPC make all the difference. But Behram, the final cleaning up will depend on the entire legal system improving. I mean, America went from a bank financed infrastructure to a capital market financed infrastructure because of the Chapter 11 laws. Do you see us, what is the next step in terms of improvement of bankruptcy enforcement?
Raj Kiran put it beautifully that you choose the assets, you choose the counterparty. Only thing is, Raj Kiran, you're dead right about the risk also, but therefore give the FLDG, because you have the confidence, it will never be called upon. Once, if some years pass, they get the experience, then they will not ask for it, or you'll reduce the percentage. So just get the ball rolling, to get Vibha.
You're asking NABFID to do the FLDG, right? The first clause guarantee.
Because he's much more comfortable with the risk, or whoever's the right party. All I'm saying is that, just push them, like we had to push those first 12
yes.
to use IBC. Like that, just give a push because we need it desperately. And again, Lata, I reiterate that we've come a long way. Yes, there's huge room for improvement. Once the amendments come, I think we'll have a discussion and most of you will be happy.
Okay.
But today's headline was that the time has doubled. So even with that double from, 18 months to 2.5 years, it was 6 years. So we have already made quite a lot of progress. I'm sitting next to you and there's a COC going on in the next conference room. So even now things are happening. We just need to make it happen faster.
Point taken. Unfortunately,
Can I
out of
just-
time. Yes, Mr. Rai. Last
Actually,
10
the
seconds.
credit enhancement as a product, actually 2015 itself, Reserve Bank has issued the guidelines. It didn't take off because the way it is structured is very costly. Because with a credit enhancement for a bond issuer, he saves maybe 100, 125 basis point on the interest from A to AA plus and kind of thing. So he can't pay the guarantee commission of 2.5%.
Yes.
Actually, like, you know, it is in the works. I am very sure that some modifications may come, and we are actually working on this product, and hopefully we will be able to give that, because the LGDs in these assets with the kind of things which have happened cannot be more than 20-25%. And if that kind of comfort we can give by way of credit enhancement or first loss guarantees, I think that will really strengthen the insurance companies coming
Yeah,
in.
just to put it in layman's language, what Mr. Rai is telling us is, if an infra builder is unable to pay, the first loss is guaranteed by another bank. If some such an agreement, which is called credit enhancement, comes into being at a price, you have to pay some guarantee fee, then more insurance projects will become attractive to the buyers, to the providers of funds like SBI Life and HDFC Life. So, okay, we are ending on a positive note. Mr. Sathe, Behram, Mr. Rai, Amit and Vibha, thank you very much for an extremely constructive and hopeful discussion that very soon we may be able to find more long-term money going into funding India's infrastructure. That's a wrap on this special edition of Indianomics. Thanks for watching.